Probably the first most important thing is that you automate your savings. I don't care whether it's a 401k or auto withdrawals from your checking account or money coming from your pay directly to your savings account. If you automate it, out of sight, out of mind, it'll happen. So Joe, that's number one. That's probably the most important thing on the whole list here.
Yeah, for those of you that are still working, of course, you want to make sure that you pay yourself first. But then when you start constructing your investment portfolio, the second biggest decision is, well, how much risk do you want to take, right? So that question is, how much money do I want in stocks versus bonds? That's one of the most crucial decisions that you all want to make in your portfolio. And that needs to be based on your specific situation. Then you can get fancy, right, and look at what types of investments do I want to get into? Do I want to get into individual securities or mutual funds or ETFs? Or then what types of investments do I want to get in smaller companies, larger companies, international companies, and so on? And this is really defined out by your risk.
It is, and I think some people like to invest in individual securities. We don't have a problem with that. We would prefer to have you invest in mutual funds or index funds or ETFs just because they're more diversified, and a lot of them have very low fees. And then in some cases, like with gold and real estate, you can actually own the asset outright, and that has some advantages as well. But I think for most people, if you focus on the mutual funds, index funds, ETFs, you'll probably have the best investment experience.